get this going, I have a recording going. So let's start from the top here. Okay. All right. We've got, today is the 28th, I think. Yep. Dollar Tree discussion. Stock is 82.75. Okay. So without sitting right at a strike, we can do a couple things. We can look at the nearest at the money, which would be the 82.5, and we can see that that straddle is about $6.17. Everybody see that? If I add together the at the money call and put, it's about $6.17. Now, yes, exactly, Dimitri. Now, we want to measure the amount of extrinsic value, the amount of premium. Okay, so in this, the call option actually has, at the time, it had, well, 82.75, it had 25 cents of intrinsic value. So if we reduce the straddle by that 25 cents of intrinsic value, we get a total amount of extrinsic value or premium of $5.92. Everybody see that? Okay, so that's the expected move, Dimitri. Does that make sense to you? No, blind is good. No worries. Keep asking. Okay, so expected move is about $5.90. Gives us an expected range then of 76.85 up to 88.65. Okay, now looking at the chart, this thing has obviously consolidated hugely since last earnings, which you can see by this massive amount of value. Okay, if we look towards the bottom of this area here, and then the top of that area of this consolidation, that takes us just about to the expected range. Anybody else have a problem not hearing me? Everybody else okay? Okay. Dimitri, I think that's on you. Okay. All right. So this support, this resistance coincides right with the expected move. Come on, Thinkorswim. Let me get you off the screen. There we go. Okay. So 76.85, 88.65. If we can construct something to get to those points without seeing a direction here, right? Again, going back to the chart here, what do I see? I see consolidation. I don't see bullish, bearish, anything. So I want to do something. If the appropriate reward to risk is there, I want to do something that takes advantage of this range. You talking about the gap back here, William? Okay, great point. What price is that gap? William, Wally, anybody else? What price is that gap at? Right there. Yep, 77.5. Well, look at our expected range here, the expected range actually goes just below that. So anything we would construct, we would have to see a break even at least at the expected range, which would cover any potential move down to the gap. And then yes, there was also a gap, William, to the upside at 90. So let's put that on here. Gaps at 77 and a half and 90. So we certainly want to take that into consideration. Okay? So the iron condor that I had come up with here, the 78 half and 78 half, 77 and 87 and a half, 89 iron condor is about 80 cents. If we could get that filled at 80 cents, our break evens are 77.70 up to 88.30. Okay, just inside the expected range. But getting, if we can get 80 cents, this is a little bit better than even odds. Okay, now I've now just constructed something else that I'm going to show you in a moment here, widening out a little bit. The 78, 76, and 87 and a half, 89 and a half iron condor is about 95 cents. These break evens would then be 77.05 and 88.45. Takes us even closer to those expected ranges, gives us room below the gap to the downside, not quite as high as the gap on the upside. Okay, and then, and I'm going to show you this also, the 78, 76, and 88.90 iron condor is about 90 cents, about a nickel less than that. That gives us break evens of 77.10 and a little bit more to the upside, 88.90. That, to me, I like the best. Now, I don't love the 90 cents. I'd love to get 95 cents for that, and maybe we could. Here it is on the screen. You know, we could put that out there, but that really encompasses the break-even ranges, major support, major resistance, the gap to the downside, almost the gap to the upside. On which one, Ken? On this one that's on the screen right here? Are you talking about? No. This one right here. No, I changed the strike, Ken, from 87.5 to 88. So if you look at these strikes right here, That's why I like that. And especially if we could get 95 cents for that, not 90, and I don't know that we can, but if we could get 95 cents for that, almost at 1-to-1 odds on this, and then all the other technical support, resistance, break evens, all of that coming into line. I like it a lot. Dimitri, those gaps, and let me point those out again to you. Those gaps are just technical areas that stocks like to retrace back to. So, let me widen this out here. So you can see this big gap in here where there was no trade. Stocks tend to like to get right back to that area there and do what's called fill the gap. Okay, and then here on the downside was this same area right here. Stocks tend to like to get down there. Doesn't mean they're going to happen. It's just one of those technical indicators that we watch. So on this iron condor, we have great support, we have great resistance. It correlates right in line with break evens. I like this a lot. I like it at 95 cents. I don't want now. It looks like one of you. I guarantee you, someone in this. Oh, hang on. Let me actually redo this. 78, 76, 88, 90. Okay, there we go. Smack dab in the middle is 90 cents. Okay, I'd be willing to put this out there for 95 cents right now. Maybe we don't get filled, but it certainly gives us time to potentially adjust during the day. If we want to lower it or cancel, whatever. Definitely gives us time. Okay. Any questions on this? I like this a lot. I like this far better than the one we talked about on TD. You know what, Dimitri, for a short like this, for an iron condor, we're looking for an immediate move based on earnings. That's why I don't want to go out to the 7th. Are you talking about this chart right here, Michael? This is 18 months. It goes back to May of last year, if this is the chart that you're talking about.
Okay, that's on. So
Yeah, that's this one right here. It goes back 18 months. All right, so without further ado, if there are no questions, I am going to put this signal out there again. I'm going to put this out there at 95 cents right now. I don't know that we get filled there. If we don't, we'll reevaluate later in the day to see what we want to do. All right. Let me wrap up this recording, get it all posted in the room, get the signal out. I'll be right back, everyone.